All right. So, welcome everyone to my webinar. This is Money the Expat, and my name is Darema, and I'm a financial advisor based in Shanghai. And I work in a financial advisory called the Veer Group, and what we do is financial planning for expats in China. And in the recent couple of months, ever since the fact that SpaceX is going public became public knowledge, a lot of people were asking me how to buy the stock and how to where to buy it, etc. Right? So a lot of people were reaching out through my channels and then text messages in WeChat. And so they went public on uh, June 12th. And so they're public now for a little over a week now. And so what happened is, so they went public, and so the stock picked up. But then, as it happens, shortly after the IPO, it started going down. But that's normal for a stock to go up and down like that, especially shortly after the IPO. So today's topic is not only SpaceX, but also there are very strong rumors about Anthropic going public. Anthropic is the company behind Claude. Some of you might be using that already. And another company going public potentially. They're also applying for valuations, which is a pre-IPO step. That's OpenAI. So the company behind ChatGPT. And so why do we even talk about these, right? So first of all, these are tech giants. So these are one of the most big AI companies and tech companies that are going public after quite a while being public. And so this is an important move in the markets when such large companies are joining the public sector. So I prepared a presentation. So we should be done in about 30 minutes or so. And so if you have any questions, just drop them in the chat box or the Q&A section. Mm, no, actually just the chat box. And so I will share them after I finish the presentation slides. All right, so let's see. Okay, so before we crack on, please note that this is educational content and not a financial advice. So if you're making any investment decisions, speak to professionals like myself in a one-on-one consultation. And of course, make sure that you do the research and understand how the investments work. Okay, so quickly on the agenda for today, we will be discussing what are these companies, what they do. So some of you might know what SpaceX does, some of you might not. So I'll give a quick overview what these companies do and why are they so valuable. Then we'll discuss why these companies are going public now and what does it mean for the markets. Then I'll go over a few common mistakes that expats make, especially when investing in stocks. Then I'll give you my personal opinion. Should you buy any of these companies and how expats in China can access the SpaceX and the other two when they go public. Okay. So first of all, the SpaceX, right? So some of you might know what SpaceX is and what they do. Some of you might not, and that's okay. But I'm sure that all of you will know who Elon Musk is. So this is the founder of the SpaceX, also Tesla, and since a few years ago, he's also the one running the X Twitter. And so what's unusual or what they do at SpaceX is first of all, this is Starlink. So these are the satellites uh, up there in the space. So there are roughly 10,000 satellites around the Earth, providing the connection, the internet for remote areas. They also were the ones, and this was the revolution at the time, and they started using reusable rockets. And this was early 2000s. And currently they do NASA contracts. Then we have OpenAI. So it's expected to go public sometime 2026, potentially by maybe closer to the end of 2026. And this is the company that started the ChatGPT, and to my knowledge, this was the first um, generative AI that we're using, right? So at least ChatGPT definitely was the first one that I started using back in the day. And then after ChatGPT, there was Gemini, Copilot, Claude, DeepSeek, etc. So ChatGPT was the first one, and it's still one of the leading AI companies. Then there's Anthropic. Also, they were applying for valuations to go public, and very likely that they will go later this year or maybe early next year, depending how fast it will take them to go public. And Anthropic is the company behind Claude. And so the mission of Anthropic is responsible AI and safe AI as well. So they are also used by corporations. Like, for example, my company uses Microsoft 365, and we use actually Claude is part of that, right? So a lot of companies are using Anthropic in their AI tools. So let's take a deeper dive on these three companies. So SpaceX, as the name suggests, they are focused on making space travel closer to us, right? So it was founded in 2002, and there are several like departments or parts in one company, and one of them is Starlink, which provides satellite internet to remote areas. So, for instance, if you're on a plane or on a boat far from ground and you have internet connection, that's likely provided by the Starlink, because so they have these uh, collaborations, partnerships with companies. So on ground, there is towers that are providing the internet service, but when it's far away where cable or fiber cannot reach, Starlink is the one providing the satellite internet. So same goes for very remote areas like Antarctica or North Pole. So where there's no fiber or no cable, so they're using satellite connection. Then there are reusable rockets. So I don't know if any of you are following the SpaceX. I've watched quite a few launches, which is very interesting to see actually. So in the future, if you can check it out, I think it's very interesting what they're trying to achieve and make space travel more accessible, and that might be happening sooner than we think. Now, whether would I go myself or not, that's another question. But I think it's interesting that there is a company that's trying to make space travel uh, accessible to people right now. And actually, they're not the only ones. So there is some competition. So there is a handful of companies that's working on it now, but we'll see who will be next in the leading positions. And so once after they went public, so the valuation was 2.6 trillion. Now, don't quote me on this number because this is last week, right? I did this numbers on Friday, And actually this week the stock went down in price, so the actual valuation might be lower than 2.6 trillion, but it's still massive for a company. Okay, so I'm including the ChatGPT and Anthropic in one because they are both behind the AI boom with ChatGPT and Claude. So I don't know about you guys, but I really like Claude. It just kind of gets me better. So for work stuff, emails, content generation, or anything like that, these days I mostly use Claude. So combined valuations for these two companies is over $1 trillion, which is massive for just two companies. And there's a lot of interest from large institutional investors like Microsoft, Google, and Amazon because they want to implement AI tools from either of these companies or maybe other in their services. So potentially in the future, we are looking at AI powered not only laptops and phones, but also vacuum cleaners, maybe washing machines, TV, anything else like robots, anything you can think of that might need some kind of automation might end up having AI behind it to make it easier, I guess, for the human, just take off the decision making and just say to your vacuum cleaner, for example, or a little robot or your washing machine, I want you to wash this automatically by a certain day or at a certain time because it's still this process is still quite manual where you need to set up certain instructions. But once that gets taken over by AI, then that's something you won't need to do. So, or potentially we're looking at something like a smart house where everything is linked, and so AI is the one just running all the chores for you. So, and then next on, we're looking at AI in general, not only with these two companies, is one of the hottest sectors right now. If you're following technology sector or indices like Nasdaq 100, then you know how high it is at the moment, breaking historical records every now and then. And this is partially because of the AI related companies. So SpaceX was established in 2002, and only recently they decided to go public. OpenAI was established in 2016, I believe, and Anthropic in 2019. But they decided to go public now. Why? First of all is the funding, right? There's only so much funding you can get from a handful of millionaires or billionaires, individuals, or institutions. So going public just gives them more access to more money from retail investors like you and I. So actually, you don't need a one person with $1 million when you can find a million people with a $1, right? So that just creates more inflow to develop further AI, rockets, infrastructure, maybe more data centers, more chips, etc. Another thing that's driving it is the competition. As I mentioned, AI and in AI and space exploration and space development, there is a big competition, and it really is if you're not the first, then you lost. So this is one of the drivers why these companies are trying to get bigger and more innovative because the competition is so fierce. And also the optimism around AI, right? So after we've tried ChatGPT or DeepSeek or Claude, we feel more positive about AI. So if someone 10 years ago, before ChatGPT came along, asked me to, would you invest into AI? And I probably would have said no, because I didn't see and I didn't understand how it works. And so at the time, they probably had the same problems with getting funding. And if they went public at that time, who knows if they would have been successful like they are now, right? But after we've seen what AI is capable of, then the whole optimism and the speculation how far it might go is much higher than it used to be before we actually tried it. And so generally, and then another thing is that these days, more and more investors have access to platforms and have cash to invest. And so it's not as scary as it used to be, say, 10 years ago, 15 years ago. So more people are investing just on a regular basis. So of course it could be just a couple of stocks here and there or a couple of ETFs, but still. And so of course the market conditions right now, so they know that especially if they are keeping up with a certain PR and they are staying in trends. And, for example, Elon Musk is a very public person, and there is a reason why he's staying so active on social media and he's always out there. He's always saying something or making connections, and because this is also part of the PR, right? Because the company needs to stay relatable, and he, as the founder, is first of all. And yeah, so if they tried to go public 10 years ago, who knows if they were uh, available or if they were successful at the time because of how it used to be before. But now with partially also due to COVID, right, things went more digital, and so the technology just had an enormous leap in that last 5 years. And so, yeah, so the markets changed and the valuations of these companies also changed partially because they also started receiving more funding, and therefore this is a very good time for them to go public. Next on, so generally, what huge IPOs mean, right? So once a big company announces that they're going to start trading at a stock exchange, that means, especially if it's a popular or a famous company like SpaceX, that means very high volatility. Oh, so when we have let's say a trillion worth a company joining a stock market like Nasdaq, it means that it's just getting even bigger than it is. And so therefore, especially if that company is taking up a certain percentage of the stock market, that means that volatility of the whole index goes even more than it did before. Why? Because when the company holds a large position in the stock exchange, it affects like a ripple effect when it goes down. So for instance, in the S&P 500, Nvidia holds almost 8% of the whole stock exchange. So imagine if that company, for whatever reason, let's say it dropped out, and so just like that, the S&P 500 loses 8% or whatever it is at the time, right? So, and that's already a massive drop for a stock exchange like S&P 500. So we're talking potentially around same or a bit lower than that percentage of SpaceX within the Nasdaq 100. And already SpaceX is ahead of Tesla in that same index, which means that if something were to happen with SpaceX and it dropped, the whole index just drops. So everyone who has NASDAQ 100 indices in their pension funds or in their investment platform that's already just going down in value. Again, it's just going down in value doesn't mean that you're losing unless you're selling, right? So, but it's just being mindful of that it is uh, possible that the market will be even more volatile than it is because of these large additions into the stock market. So, typically, when the company goes public, it is expected to underperform the first year. So this is because there's still a lot of hype and then FOMO around the stock. And I do expect that it will be happening with all three companies. And so that means that we just need to be mindful, and this could be a good addition to a portfolio in for someone who has, let's say, 15, 20 or more years till retirement. But for someone who has 5 or less until retirement, then something around tech, I would avoid that because in the next several years, until these companies kind of go into the market and then just settle down, it will take some time for the markets to adjust to the new scale. And also the FOMO, right? So what role does it play in investing? So let's say I'm I have access to an investment platform, and then my friends are buying SpaceX stock or another stock. And then they tell me, okay, I bought it yesterday, and now I bought it yesterday, let's say at $100. And then today it's 150. And so I go buy, and then it suddenly costs 200. And then I tell all of my friends, okay, so I made this much. And so they buy and buy. And then at some point, people will realize, oh, actually, yeah, so it's growing until it gets to the point where actually, okay, so, okay, now we bought it. Now what, right? So at some point, people stop buying or institutions start selling because within their portfolios, the stocks that they had reached a certain price. So, and this is uh, normal procedure when a certain stock reaches a certain price, they will sell some of the stock to kind of shave the position within the portfolio. And so when that happens, we're talking maybe thousands, if not more, positions or stocks. So that, of course, when that happens, it's called a sell-off because when they sell, other people might look at the stock price and start panicking that the price is going down. So they sell too. And it's a cascading event when one sell-off happens after another, and it's like stairs. Very common, especially when the company is new. And if you check the SpaceX stock right now, you will notice that it did go up, but then it started going down. So this could be the first people who bought it at the beginning. So they just waited a certain price when it reached and they started selling. Or it could be, yeah, also institutional investors. They waited for a certain price and then they started selling. So it doesn't mean that the stock start suddenly became bad or something. It's just that the investors that held a certain amount of these stocks, they sell. Okay, next on is so the risk and opportunity. Mm, it's a with tech stocks, of course, the reward can be very attractive uh, when we're talking about the potential returns, but then the risk is something that we need to be mindful of because these are, at the end of the day, tech companies, and many of these are innovative, and we don't know how AI will go and or how the space exploration or space travel, how that will go. We don't know, right? So it's a big risk for investors. But if it does play out, if it does shoot up, then good news, right? Happy days. So we just need to remember that. Um, so a little bit on common mistakes that I come across as a financial advisor when people share, oh, I did this, I tried that. Back in the day, I did this and lost this much, etc. Right? So most common one is the expectations that, oh, I bought this stock for at this price, and then it became like a million. So someone buying a stock for $100 expecting that it will become 100,000 or $1 million overnight. It doesn't work like that, unfortunately. It's not a lottery ticket. So when you're buying stocks, don't expect that they will just go up like that overnight. Another thing is, yes, underestimated risk appetite. Very common for people to not even understand what their risk appetite is. And honestly, before your first market crash, you don't even realize what is your actual risk appetite. So this is where it's helpful to have a conversation with an advisor, or stay diversified and have that strong gut when it comes to market crashes. Then another thing is very common to putting too much in one stock. It For many people, when they get, let's say, $1,000 or $5,000, they open the platform and they put all 5,000 into one stock, and then they cannot sleep at night looking and checking every day how the stock is performing. That I can tell right away that first of all, the risk appetite is not matching to invest in the stock, and you shouldn't have put 5,000, all your money into one stock. So the way to go about it is put the majority of that into an index fund like S&P 500 or even Nasdaq, right, for long term. And then another half or 20% or 30%, whatever you're comfortable with, into the stock. So this way you're a bit more diversified and not all your savings are stuck with one stock, right? And another thing is no long-term plan. So again, because buying stocks, trading stocks or buying ETFs on a platform is relatively easy once you have that account. So typically on platforms like Interactive Brokers, there are no restrictions on how many stocks or units you can buy. And so it's very easy to just buy a few stocks and just forget about them. And I've spoken with so many people who, opened a platform back then and now don't even remember their password. And yeah, at the time they bought some stocks, something that was in trend at the time, but then maybe it did well, maybe not, right? So this is something that we need to remember and ask ourselves before investing, what's the plan? Am I buying stocks to be part of my retirement plan, which I don't advise, by the way? I think the ETFs or funds are a better approach when you're saving for retirement, and this is something you can research yourself, unit cost averaging, or speak to an advisor. And if you are buying stocks, how long you want to hold them, what is the goal, right? So are you waiting for a certain price when it reaches there and then sell, or what's the plan, right? So how long do you want to keep the stock? And if you cannot answer, that's where you should start. Do the research, why this stock, and how you should start your long-term strategy before you invest into anything. Okay? And then another thing also very common is that, like I mentioned before, there's big FOMO and people buy because their friends bought or their colleagues mentioned it, and it may be at the peak, which happens a lot in the time when the stock just launched. So there's a lot of hype around it. So you may as well bought at the peak, but then inevitably at some point it will fall because that hype cannot go on forever. So at some point, that noise around the stock, oh, excuse me, will finish. Okay, so just remember that and be mindful that wild swings with fresh stock it is a given. Okay, so should I buy? And this is one of the most common questions I was receiving in the past several weeks. So what I'll say is stocks are not suitable for every single person, especially stocks like SpaceX and potentially OpenAI Anthropic, because these are tech. These are very volatile stocks, and unless you are prepared to buy the stock for minimum for 5 years, ideally more than 10, then don't buy it, right? So just go for something steadier like ETFs or funds. And so we're yet to see how these industries will play out in the future and which of these companies. I mean, we can already name so many companies that are involved in development of the AI, and which of these companies will stay in the race in, let's say, in 5 years or 10 years. We don't know. And that's why it's so risky too to go with stocks because uh, the leaders today might be different from what it will be in the 5 years or 10 years. And but if you are someone who's willing to take the risk and understands that the stocks will be going up and down, and you have that that feeling that okay, so I'm going to be okay no matter what, without panicking when the market crashes, then it could be a good addition for your portfolio. But just make sure that you understand that and you are diversified, and not just stocks, but also other assets in your portfolio. Next on, so how expats can access stocks from China. So first option is the DIY platforms. So DIY platforms are essentially you open the platform, you fund it, so you go to the bank, make the transfer, or use Wise to make the transfer, and you do the research, right? So whether or not SpaceX fits into your portfolio and how many shares you should buy, and when is the time to sell and rebalance, etc. So it's all done by you. So ideally, you understand how it works and do the research. And I think it's a good opportunity for those who enjoy doing that. But if you're someone who doesn't have the time or too busy, or you just don't want to uh, sit and read about stocks or funds and do the research, and if you prefer to have an advisor who does that for you, then you can use advisor guided platforms. On both of these options, the stocks are available along with funds and ETFs that have SpaceX and other companies. So it could be more broader ETFs, like index ETFs, for example, or AI ETFs, or uh, more niche ETFs that are focused on a specific area, like AI development or chip makers, etc. Then, along with others on advisor guided platforms, we have this product called structured notes. So again, this is something that's not available on retail platforms. And so they do have access to stock notes that have certain conditions, but they do also provide an attractive return. So if you want to learn about that, we can have a separate chat because there are a few factors that you need to consider when it comes to structured notes. Again, so you don't need to buy the stock, so just wait for a little bit and then it's a matter of time when the SpaceX will be added to most of the index ETFs and more industry focused ETFs in the future. And if you're someone who for whatever reason does not want to have access or exposure to any of these companies, that may be difficult, right? Because they will be in most of ETFs and a lot of funds. But a way to go about finding a fund that doesn't have SpaceX or other companies, it's go through um, actively managed funds. So specifically those that have a specific theme. For example, we have a fund, a global equity income, for example. So it invests in companies that are, first of all, these are industrials or consumer staples, and essentially industries that cannot be disrupted by AI, or at least not as disrupted, right? Because these are the companies like Coca-Cola, Walmart, Adidas. So companies, because no matter how things will go in the world with AI, we will still wear clothes, we will still buy a can of Coke and buy food, and also use other products like shampoos and soap. So there are specific funds that are there to avoid that volatility of other industries. So that's something to look into as well, especially if you're someone who's concerned about the AI and what it may do to like our lives, right? What kind of change it might cause. All right, so key takeaways. So first of all, these will be potentially the biggest IPOs this year. Huge volatility, but high potential as well, especially around the responsible AI and SpaceX, definitely. And ChatGPT, they're also working on improving the AI, and who knows, there will be more things that they are working on. And with more funding, there will be other projects that they might make real, right? So something that we cannot even think of now, but they will make it possible. And so when we're talking about these large companies, first of all, we need to understand that we need a plan. So not just buy because everyone else is buying or because everyone else is talking about it, but we need to have a plan before we invest our hard-earned money into something that might not be a good fit for our goals and for our risk profile. So it's about finding that balance where you're comfortable, but also what you're comfortable with still works for you and gives you growth that you need. Okay, yeah, I covered this. And so when talking about the access on international platforms, funds, and ETFs, so you will have access, so you don't necessarily need to buy the stock directly. So just go through ETFs, so that way you will be more diversified and less volatility in your portfolio. I think that's it for me. Okay, so if you're not connected with me in WeChat yet, scan the left code, add me on WeChat, and if you're not following me on my YouTube channel, do that. So the other QR code is for my YouTube. I've already made a number of webinars on retirement planning and crypto and properties and how to get your savings out. So there's a bunch of webinars already in my account. So just follow me and you can check out my other webinars. And yeah, I think it's time for some questions. So someone has a question about retirement. Yeah, you can message here below if you have a question about retirement, or you can add me in WeChat and then ask me later. So for SpaceX and others, I think most common question is also how to get it there, right? Especially when it comes to international platform. As I mentioned, yeah, just good old bank that could work. So first you will need to convert your RMBs to dollars and then transfer dollars to the platform. So for my clients, of course, these are the steps that I help arranging with. But if you're doing it yourself, then you will need to go to the bank and make the transfer into your account. And also, Wise is really useful for those who want to make international transfers between their own accounts or to the platform. Again, it might require transfer in RMB, but then conversion to USD and then transfer to the platform. And yeah, so another question that I often get is, okay, so what else is happening, right? So there's so many things in the world of finance, in the world of investing. So what else should I be looking out for apart from these big IPOs? And so that would be if you're following the news. So after the conflict in the Middle East, which seemed to have calmed down in the last couple of weeks, it will still take time to kind of replenish the oil reserves in different countries. And I do expect that with that, plus this demand for AI and data centers, right? So everything that Claude knows or ChatGPT, all of that requires memory and some kind of place to store it. So we're talking data centers, memory chips, and a lot of electricity because they need to be plugged in 24/7. So among other trends that are going to be up in the near future. It's energy and chip making, but also more specifically memory, right? So memory chips. So these are the three things that we should look out for. And so within reason, there should be some part of portfolio. There could be some part of the portfolio that could have exposure to any of the mentioned industries. And so yeah, Rahila, you're welcome to reach out to me in the DM. So with this, I will uh, finish this webinar. Thank you all for watching live or online later. And if you're not connected with me yet, add me. And yeah, until next time, thanks for your time. Bye bye.